John, good to see you again.
Good to be here.
So when we last met, you were eServGlobal and you're now Wameja. Could you tell us how the structure of the business has changed?
Well, the role of Wameja now and going forward is to manage its interest in its single investment in the operational vehicle of HomeSend. We have 35% of the shares in HomeSend, just over, and Mastercard have the other approximately 65%. So HomeSend is a hub that provides low cost, highly transparent, real-time processing of cross-border payments and bank transfers. It faces one of the largest markets in the world, being cross-border payments and transfers, which at McKinsey's last estimate was about $127 trillion of volume per year, which generates, in their estimate, about $200 billion of revenue to global banks. A key point here, the aim of HomeSend is to actually help banks provide their own digital disruption, if you like, and meet the ever-growing challenges of digital disruption that's kind of happening in the world, the challenges from challengers, and the growing expectations of regulators and their customers and so forth. So HomeSend aims to help banks with their challenges, not compete with banks.
And what's so unique about the offering that no one else can offer?
One of the key things is our partner Mastercard. Mastercard has about 26,000 financial institution customers of its own. And with HomeSend, we have an offering that can assist those banks meet their challenges. Now that is at least distinctive, if not unique. And if I add in, and repeat myself perhaps, that we're offering real-time processing, high transparency, low cost, and we can provide funds cleared and fully drawable in market in seconds to minutes. That's a very strong offer indeed.
And you've just released your KPIs. Can you talk us through them?
Yeah, so we're delighted to see the continued direction of travel, which is a much faster growth rate than last year. And if we annualize the last 2 quarters of growth, then we're growing at about 120, 130% a year. It's not where we expect that to go in the future. We expect it to be faster, but it's not bad. I mean, there aren't a lot of companies able to grow at that rate over a half. From everything we're seeing, we don't see that doing anything other than increase over the rest of the year.
And how else can people get a sense of what the growth rate means?
Well, we're very pleased with the year so far. It's what we would have expected to see. However, we did a fundraise last year, and one of the aims of that fundraise to support a much faster build out of the network and infrastructure, refinement of the sales model, and the speeding up of the ability to perform implementations. So the natural follow-on is that this year we're looking to see more banks being signed up, more of those banks reaching go live, and the time to the go live reducing and becoming quicker. Then to see existing banks get to a phase 2, a phase 3 and beyond. And therefore the natural concomitant to that is that you would get more volumes from existing customers and then additional volumes from completely new customers. And everything we're seeing at the moment, right now from here on in, is consistent with that. So naturally, I would actually expect to see a speeding up of that growth rate. But it's about execution, so I won't put a number on that today, but we are seeing the things we expected last year come true in terms of the workload going on in HomeSend at the moment. We are very interested to see the execution work out, and the most recent liquidity request was for 5 million euros. It's coming very hard on the heels of a 2 million request only a few weeks ago. And that is about this. It's HomeSend readying itself for a faster increase in volumes in the very short term. That is the reason. Now, in the longer term, the general discussion is about using third-party and commercial ways of solving this rather than shareholder routes. And we agree with that, and that's what our current belief is that's the best way to do this. But it's all about, this liquidity is all about, we've got more banks moving on to further phases, more volume from existing customers, additional volume from new customers, and it's happening from about now. So we're very interested to see how the rest of the year pans out.
And can you talk us through the slightly lower transaction volumes?
Yeah, this is just mix. If we were doing different sizes of ball bearings, you might get a similar effect. It's just some types of transaction or market or customer have grown a bit faster or slower relatively to the others. There's nothing really to be inferred positively or negatively from sort of smallish changes day to day, week to week, quarter to quarter. It doesn't mean a lot. The key point is all the volumes have risen. It's just slight variances of that volume growth rate.
So you've just published your interims.
Yep.
Can you talk us through them?
Well, all those operational numbers are to do with the old core eServ business that we disposed of. There's no read across going forward. None of that performance has any bearing on things that we will see going forward because we have no core business anymore. Previously, we had a company of 100, 120 people operating in a number of geographies. Now the costs are reducing back to just the board, and by the time we enter next year, more or less, we'll only be non-executive board members, not needing to travel around the world in a big way. We've already outsourced the finance function. And so as public companies go, this will be really very far down there in terms of its ongoing costs, which is exactly what we aim to do. It's exactly what we couldn't do when we had a much more complex operation with the old core business. So in summary, numbers for the first half are only about the past. The numbers going forward are really unrelated to that, apart from the fact of our continued investment in the operating entity that is HomeSend.
So what will the numbers represent in the future?
Well, essentially, there's two big components. One is the ongoing lower costs of our board PLC structure. And the other, of course, is our share of the performance of HomeSend. Losses till now and profits as we go forward at the right and relevant time. But one of the great strengths of HomeSend is its potential operational gearing. That because it is not consumer and customer facing, we're not adding hundreds of people into contact centres. It's more of a white box supporting banks and other financial institutions and their own customers. And so if revenue built quickly, then of course much more of that is able to drop through to its bottom line, and therefore that would show through in Wameja's share of that profitability. And
what about your relationship with Mastercard?
Well, it's a very good relationship. I think it's a sign of HomeSend is maturing as a business, for sure. And it's perhaps a recognition that this is a really very large market opportunity that we are now starting to really get at. And we've met more times with Mastercard this year than in the rest of the history of the joint venture. So I'm pleased with the relationship.
So there's a lot of M&A going on in the cross-border payments market. Does that have read across for Wameja?
Well, a few of our investors for sure have inferred that these are just visible signs of the importance of this market for Mastercard. I mean, after all, Mastercard has spent several $1 billion this year on acquisitions in this space. It's a huge space. We can't satisfy all of that market demand just through HomeSend. It's just too giant. No one entity, platform or company can possibly meet all of the opportunity. But for our investors, they're certainly very heartened by the visible signs of the importance of this market to Mastercard, as proved by the dollar value they put against it.
So summarise where we're at with Wameja.
Well, HomeSend and Wameja are really set up for success. We've got 35% of the shares in a company which is HomeSend, facing one of the largest markets in the world. Our partner is Mastercard, who have a huge customer base of their own, which HomeSend can help. Wameja has a range of legal and commercial protections that support its position. HomeSend itself is integrated with the Mastercard Send network. And very importantly, we're not some PowerPoint-based fintech. We have real blue chip customers right here, now, today, some of whom are large correspondent banks, some of whom are talking about moving on from phase 1 to phase 2. Mastercard themselves have talked about Standard Chartered Bank, Bank of Montreal. The model is starting to be proven. It's taken 9 years to get here since eServ, as it was then, first set up this business. And here we are now with HomeSend and Wameja absolutely set up for success.
Tremendous. Many thanks, John.
No, thank you.